Plans to invest over 14 billion US dollars into South Africa by the Chinese government seem to be bolstering some confidence in markets once again, a bit of a recovery in the rand. The JSE is also coming to the end of June and July looking a little bit more buoyant. We've also seen a cautious return back to the local bond market, almost 3 months of persistent selling. I'm Bruce Whitfield. This is Taking Stock, and today we are looking at what's moved the markets in July. The Chief Executive of Vestact, Theron and Wealth Manager at Swiss, Viv Govender, joining us on Taking Stock this evening. Big story. Everyone's outraged and furious, except Viv Govender. I expect Paul's wrong because he is Naspers' biggest fan. 1.6 billion rand payday for the Chief Executive, Bob van Dijk. Is he worth it?
Well, the company came out and said that's absolute cods. He's not being paid that much. Those are share awards. He's actually only being paid about 12 or 13 million rands worth of basic salary. Maybe you can get that to about 30 million rand. But remember, this is the guy who runs the most valuable company on our market. If he can close the discount to the 10-cent underlying what, then he's definitely worth it.
So when you talk about closing the discount, Naspers, which owns 30% of 10-cent, trades at sort of 70% of the value of just its 10-cent stake on the JSE. Exactly. 1.5 trillion versus the real true 2 trillion rand value.
That kind of remuneration is the same as what guys over there get. You know, people who are CEO of Nike and Bank of America and Starbucks, those sort of companies.
But he hasn't closed the gap. That's the point. Is this like an upfront payment? It feels very,
well, he'll get those
2016.
kinds of 1.6 billion numbers if the shares that he has been given by way of options are worth, you know, what they ought to be worth in the fullness of time if the gap's closed. So then he'll get that big score. I think it's fine if long as he does. That's the benchmark, is the international scale of company that he's running.
Yeah, but this is a company over which the market, you know the arguments, we've had this discussion on this show many times, that Naspers is not about DSTV, it's not about Beeld, it's not about the South African media assets or anything like that. It's not even about Mail.ru and the countless other great internet businesses that this company owns. It's all about a company that's run by other people in China.
Yes, but they are using the cash inter alia that they raised from that partial sale of some 10-cent shares to invest heavily in two things. The one is the delivery business. You know, they own Delivery Hero and a bunch of other things.
That's so like big side, large-scale Mr. Delivery businesses.
Motorbike guys delivering parcels for all sorts of third-party e-commerce businesses. And then the other thing is classifieds, which is, you know, stuff like, Let Go in the European and US markets, and also, what's the other one that they have here? Gumtree, exactly. I was about to say green something with a Gumtree, yes. That they say can make big money. So they're investing heavily there. That's fine. They can do that too. But they do have to find a way of closing the discount with a 10-cent
The
stake.
discount is not yet closed. Is he worth the reported 1.6 billion rand? These are options that go back to 2013, which have escalated in value over time.
Look, the one thing we have to consider is the fact that South Africa may not be big enough to contain a third of 10-cent. And that, I think, is what accounts for a lot of the discount. I mean, Naspers is already the biggest stock in our market yet, the most valuable company in the, like you said. But it's not at its true value. Why? Because it can't be in its true value in this kind of environment, because it's a huge fish in a pond that's not that small, but not big enough to contain it. And that's the problem with 10-cent. And if 10-cent grows like it might grow into the future, it might become one. But the thing with 10-cent is it is a company unlike other companies out there, because it has something that nobody else has. It has WeChat. And WeChat is something that's very strange, that we don't see in the Western world. And I think it's actually something that the Chinese have that is actually, you know, ahead of a Facebook, ahead of a Google, ahead of all those things. It is, in China, you basically live off WeChat. You can do anything with WeChat. You can book your dentist appointment, pay your dentist, book your car ride to the dentist, and then the ice cream thereafter. Everything can be done. You live your life through WeChat. And that payment system and all the things that goes with it is a huge, huge industry. And that's for basically 1 in 5 of the world's population.
Yeah, I mean, we don't grasp the magnitude of it, but still, Bob van Dijk doesn't run that. He runs Naspers, which bought the stake in this business in 2008 or something. No, 2002 or thereabouts.
Yeah, and exactly. And the thing is that, look, the 10-cent thing was a lotto win. It's not even a gambling win, it's a lotto win. The returns you don't get out in the lotto. You wouldn't get the roulette even. And he's trying to repeat that with other things like, other investments. He's never going to do that again. That's a once in a lifetime chance, maybe once in 100 lifetime chances. But the real problem is a structural problem that he basically, if he can fix it, somehow get, ability to erase capital elsewhere, etc., then fine. But Naspers itself in the South African environment won't be able to do it.
Paul?
That's the solution. That A share, N share thing has to get broken. Koos Becker has to kiss that goodbye.
But because Becker and one of the other directors, a guy called Stoffberg at Naspers, control 68% of the votes at Naspers.
That's a crazy anomaly. Can't happen.
But it does happen, and because it's worked well for investors so far, people have left it alone. Let sleeping dogs lie. It's not caused a problem for us
I think it's
yet.
going to get cracked and it's going to go global. So in the same way that we saw Yahoo getting dismembered when it had all those Alibaba shares, this will get dismembered somehow. So Naspers will be sucked into the global capital markets by people who have much more money and who are keen to close the discount. So the management team has got a clock ticking. Koos and Bob need to work out what to do here, because otherwise it's going to get taken out of their hands.
What is the real value of a CEO, though? Because in South Africa, where the pay gap is as big as it is, the wealth gap is as big as it is, these things are always massively controversial. I ask this as a leading question, Viv Govender, because we saw the share price of EOH in the middle of July spike up very sharply after one announcement, and that is the appointment of a guy that most South Africans have never heard of to become the CEO of EOH. His name happens to be Stephen van Coller. If you understand banking or watch banking, he was the head of the corporate investment bank at ABSA. He then went to MTN with Rob Shooter and the big management team there of A-types in the exco there. A year later, he resigns from there, takes on a big job at EOH. That share price rallied up 1.2, 1.3, 1.4 billion rand in a single day, and has held that level on the basis of that appointment. Now, surely if you're that guy, you say, I want a piece of that action, please. Look what I did.
Exactly. But look, it depends on the industry. Certain industries, it doesn't really matter that much. Commodities, I don't think it matters that much, because you depend far more on the commodity price than you ever do on the direction of the CEO, unless they go and buy something strange for an inflated price. So they can do something bad, but they really can't give you the extra benefit of being a CEO. In some industries, like with EOH, where you do have a lot of control over what you're going to be making, you do have a lot of control over decisions, and a lot of strategic decisions to be made by the company. EOH, I think, would benefit from a better CEO, more than some other companies out there. Whether it's as much as $1 billion plus, I don't know. But it is one of those sectors in which you will find a better benefit coming through. A company that basically makes that kind of strategic choices, where those choices are as important and those choices are in the hands of the CEO.
I could pick a hole in your argument very briefly, and that is, you say CEOs in the resources sector don't really make much difference. Look at the performance of a Lonman, of an Impala Platinum, versus the extraordinary outperformance of an Anglo-American Platinum. That was a CEO-led restructuring of Anglo-American Platinum, which would have been bust by now had it not been massively restructured. Mining too can be creative.
Can be creative, but a lot more depends on the platinum price, and a lot more depends on some other things outside your control, and also what the ground that you're basically allowed to deal with. Lonman will never be able to do that because their platinum reserves are very different from what Amplats has. And that what really defines a platinum company or a mining company is what the reserves are and what the price of a commodity is. And you as a CEO can maybe extract a little bit of benefit here or there, but you can't make the difference that an EOH can by having a different CEO.
Would you agree with that, Paul? I mean, CEOs set a tone. CEOs are important people, I'm afraid.
That dynamic between the board, which is often captive to the CEO, and the CEO, it is a problematic nexus, because as a professional investor, I must say, a lot of money gets squandered on highly paid executives who do badly, and then the company doesn't really prosper. So that does worry me. I particularly am against big stock awards to executives. So they're buying back stock in the market, but they're giving it to the executives, and it results in dilution. I think there's a general overpayment that happens, because most of these guys would give their less testicle for the job anyway. They don't even have to be paid. They, of course, want to be the CEO.
But okay, so CEOs don't make a huge impact. Two words for you. The kids in Hermanus no longer play a game called Marco Polo, when everybody goes and closes their eyes and tries to find each other's swimming pool. They play a game called Marcus, and then the other kid has to say Juster. Marcus Juster had a very significant negative impact, by his own admission, on Steinhoff.
For years, they thought it was a positive influence.
But there's
he
the
was
point.
such a meneer,
That's
you know?
the point. People are elevated to superhero status, the Jack Welchers of the world, all of these guys who, for a while, do incredible things until they're no longer doing
Well,
incredible
of course,
things.
Warren Buffett said you should always invest in companies that could be run by an idiot because sooner or later it will be. And I think that's what we've seen. So there are some businesses, I agree with Viv. I mean, these big global banks, for example, I'm not quite sure it makes any difference who runs them because they just inch along year after year, extending loans and trying to stay out of trouble. You know, I think you do need, in certain circumstances, though, someone with strategic vision and sometimes embattled companies. I mean, your example about Stephen Collar, that company, EOH, was being beaten like a lame donkey for the last year because it's been doing so badly. So that bounce is perhaps just a relief rally.
Huge relief rally. Enough about CEO pays and CEOs. More market movers in the month of July after the break. This is Taking Stock on ENCA.